I love to think about gold and silver in a physical form, in months of burn rate. These three things are going to shape the destiny of the United States in the next decade, and they are what matters for the real economy, not the fake Wall Street one. You will like my answer to where silver is going. So,
hey everyone, thanks for watching Yankee Stacking. Today I have Lior Gantz on with me to discuss a whole host of silver and gold stacking topics. Lior deeply understands the gold and silver markets. He is the founder of Future Money Trends, the Wealth Research Group, and has been featured on outlets like Kitco News. You're not going to want to miss a single minute with Lior Gantz. Hi Lior, welcome to Yankee Stacking.
hey, happy to be here.
Oh, it's great to have a true precious metals expert on my channel. And by the way, are you a 36-year-old self-made millionaire? Did I hear that right?
I am 36 years old, yes. And yeah.
Wow. Dude, that's very impressive to this 55-year-old man. By the way, was Bitcoin your road to riches?
Actually, not. I've never owned Bitcoin. I have missed Bitcoin in the most legendary. I can tell stories.
I bet you can. We're not going to talk too much about Bitcoin on here because a lot of the people that watch my channel love to stack. Well, they love to stack the physical, right? The physical silver and gold. Okay.
Yeah.
Are you a stacker?
Yeah, definitely. I've had various strategies over the years, and what it comes down to on my end is I think that when you own the physical, right? If you're not to trade, not looking for the equities or for the swings or anything, the long term or the rest of your life strategy, I love to think about gold and silver in a physical form, in months of burn rate. So I look at my life, at my family unit, and I say to myself, how many months of income do I have set aside in gold and silver? If there's a 2-year depression, if everything goes to, if everything goes bad, if March 2020 happens and the government and the Fed don't intervene or intervene and it doesn't work, what do you do in a true reset? And that is my mindset with that when it comes to gold and silver. So to me, it's 2 years. I'm saying, let's say there's a 2-year, it's a massive depression, problems all over, and I'm impacted. So I took my monthly burn rate for the family, and then I multiplied it by 24 months, converted that into physical gold and silver, and that's where I'm comfortable as my default position. And above that, I can look at various other means of securing physical gold and silver. So if I think that's too little, for example, then I can raise it to 5% of my net worth. I like to tweak with it in those areas. And I also like gold more than I like silver for the long term. In other words, if you're asking me, okay, one of the two, which one would you like to own for the next 30 years? I would say gold. And you asked me how much. Yeah. So I own 50 gold eagles and 2,500 silver eagles. That's physical. I also own Fizz. So I own the Sprott Physical Trust, and I actually own a number of mining equities, so mining stocks, and I'm actually an investor in the Sprott fund. So I am very much diversified into if you go to Wealth Research, if you go to our website to wealthresearch.com /gold playbook, that's actually a great PDF, a special report, a free special report that you can download and check out more of the strategy behind it and whatnot. That might be for your viewers.
You answered some of the questions I had in my head to ask you about, like the right amount of gold and silver to stack. I get that question asked of me, Lior, all the time. What's the right amount? That's a very interesting rule of thumb you've come up with. 24 months worth of your wealth.
And by the way, my strategy works for me. But if you're a 22-year-old listening to this, you're just out of college. You don't have uh, 2 years of savings set aside, I mean, it won't make any sense to you, this strategy. A better strategy for you would be to start a habit of accumulated silver. Why not buy two a month and start just getting it into your system? That's how I started actually saving money. My dad went bankrupt. I was 13. He said, go and, you need to figure it out because I can't give you allowance, et cetera, et cetera. I started babysitting in the neighborhood. Literally, I would put this money in a bank account. I'm 16 years old. The banker is like, you got money in a bank account. You're 16. You're actually saving from babysitting and painting decks and handing out flyers, etc. Make that money work for you. Get your parents here. This was June 2000, so literally like 3 months after the dot-com bubble starts to burst. So a great time to get in.
Right.
And he's like, sign this. Get your parents, sign the waiver. You're good to go. You can trade equities. And those days it was like mutual funds were like the hit 21 years ago. So it was like, here's a mutual fund and etc. Starting to, and that's how I got into saving and investing very early on. It's 16.
Lior, let's switch to the economy. Okay, it seems clear to me that the Federal Reserve here in the States has painted themselves into a corner, and they face a real dilemma between tackling inflation, which according to our Fed chairman Jerome Powell is non-existent at best and transitory at worst, and bursting the stimulus-driven recovery. Do you agree with that?
Okay, so the Fed chair, I think for one, start looking at it from this perspective. I think he's tired. I think he's worn out. He has had so many things happen during his time as chair. I think he's burdened by the obligations and the responsibility, and he can't wait to be done with this role. He's thinking about social obligations, homelessness, talking about things that usually the Fed doesn't discuss that much. Mm-hmm. With regards to inflation, I mean, look, the word inflation in the last year has now become very popularized, which I think is really important because now it's part of the conversation. It's not a taboo subject, and it's not like the stackers who always think that the Fed is under pinning it, and then you got the shadow stats, John Williams type, are saying 10%, etc., and even higher. So now it's a conversation, and that's a very good event to have. Now, obviously, CPI doesn't have food and energy, so it's not real inflation, and each person can have their own inflation. Here, for me, inflation is one thing. For you, it's another thing. For a very rich person, inflation is how much does this asset cost, or do these stocks cost? For a person on the street, it's how much does food cost? So it's very different. I think what the Fed, if you're asking about the Fed and about the correlation with gold, I think people misunderstand the correlation between inflation and gold and between the dollar and gold. And then they make the wrong decision. Gold doesn't track inflation, and gold doesn't track dollar weakness and dollar strength. If you look at the correlation between gold and any other metric in the last 50 years, what it does is it tracks real interest rates. And when I say real interest rates, is when you do a calculation or a subtraction between the nominal 10-year bond and the CPI or the PC, doesn't matter which. When you get that subtraction, if it's negative, gold is much more relevant than when it's positive. That's one thing. That's one rule of thumb. Now, when it's trending down and becoming even more negative, that's when you see gold flourishing. So between March 2020 and August 2020, when it made its run to an all-time high, the 10-year bond went to 0.5% in yield. And then you put inflation in there, the negative real yields were about -1%. That's really bad in the United States. Now, since then, the 10-year bond has moved up to 1.5%. So now real yields are not that negative, if at all. And that's why you're seeing dollar, and that's why you're seeing gold weakness, even though you Google trend inflation, it's at an all-time high in popularity. So look at that trend. Look at that word, inflation, in Google Trends. It's at an all-time high in terms of searches. So people are like, wait, well, if this is true, where is gold? Why isn't it ripping higher? And it's because the 10-year bond has been also ripping higher. So just mind that correlation and track that. We track that in our newsletter, and I think you should too as a stacker, because that helps you make better decisions as to when to aggressively stack compared to just your systematic averaging.
Excellent point there. Where do you think the real economy, the U.S. economy, is headed?
Phenomenal question, because the United States is basically it's a corporation. The United States doesn't care about its citizens in terms of their well-being. That has been proven time and time again. The authorities do not, or the government, I should say, does not look at the middle class and say, "My God, globalization has ruined our competitive advantage. How do we help the middle class who's been out, all their jobs have been outsourced, etc." It didn't have any national priority to do that. What its national priority was, look at all of our corporations; they're much more profitable. All of our headquarters are making a killing, and the stock market is amazing. So our GDP is growing, our assets are growing, but obviously most people do not enjoy that. Most people do not care that the S&P 500 is at an all-time high. Their net worth is not tied to that. It's tied to their wages. It's tied to their home price. So I think the real economy in the United States and the fake economy, or the Wall Street economy, very different. But I do think there is now a big transition. In the last 10 years, we've had what's called a trickle-down economy. So you print money, you let corporations borrow it for cheap, and you hope that it will trickle down to Main Street. And it's been proven to not work. So now you're trying a trickle-up economy. You're giving stimulus checks to every American, and you're looking to see what they will do. And the idea is that it will trickle up because of consumerism, etc. The major trends to look at with the real economy are, one, today the millennials make up a third of the workforce. By 2030, they'll be 75% of the workforce. So the millennials are the key, because they're going to inherit all these high-paying jobs that the boomers are going to retire and hand to them. One, that's really big. Think about that. That's the real economy, and that's the major trend. Second, most millennials have a college degree. A college degree basically gives you a 30% jump in wages. So think about that. There are many more jobs right now that are going to command higher wages going forward. Three, millennials have not bought their first homes. They've not formed families. They've not started to spend like the boomers did in the 80s. So if you think about the real economy, there's so much spending that will happen, which is why I believe inflation in this decade is going to be a lot higher, even on this official, PCE and CPI numbers that the government and the Fed track. We're just moving into a much more inflationary environment, because just originating mortgages for 80 million millennials is a very inflationary process. And therefore, I think the real economy in the United States in the next 10 years is going to be about building the new America, and it's going to be about the millennials and what they do. And I think that is very inflationary because it's deglobalized.
So what does this economic reality that you just mentioned mean for the price of silver and gold? That's what our viewers really want to know.
Yeah. So gold correlation with real interest rates. Where is the 10-year going? Where is inflation going? I believe the 10-year is not going anywhere. The central banks, especially in the United States, are going to do anything in their power to make sure that the 10-year bond and the Fed fund rates, which is what they directly control, stay as suppressed as possible. We also remember, everyone remembers December 2018, when the Fed funds rate hit 225, and in 1 month, the S&P 500 went down 19.2%, almost a bear market in 1 month. Why? Yields were too high. So everyone remembers that. That's when the Fed pivoted. It's called the monetary U-turn. You can Google that. And I think what's really important is that people understand that this is not 1980, where if inflation goes up, then you have a Paul Volcker moment where they can raise. The United States government is already paying $1.6 billion a day in interest payments a day. And so if you raise interest rates,
They can't.
they absolutely can, or you risk a lot of things getting in.
Do you think that they'll cap on the long end of the yield curve?
It's a very tough question. Maybe not this Fed chair. Maybe the next one. They're preparing the public for yield curve control, is what you're talking about. But look, at the bottom line is what I think is the 10-year bond stays relatively where it is, 1.5 to 2%, or maybe 2.5%. Then you got inflation, I think is going up to about 3.5. So you're going to have a decade of negative interest rates. Very good for gold. So I think gold over time, you can look for it to possibly continue at the clip that it's currently in. So about 7% a year. Very good. Very absolutely superior to holding cash. There's not even a comparison.
You talk about gold, that's awesome, but a lot of people in our community are stacking silver. I did an interview with Wall Street Silver last week. Great group of silverbacks.
Okay.
They think their ape strong diamond hand approach to stacking silver could even eventually break the COMEX. Okay, are they wrong, or are we indeed in the midst of a slow motion silver squeeze?
So I wanted to tell you first of all that I created a report for your viewers about the silver squeeze from A to Z, and my opinion. If you want to go there, it's wealthresearchgroup.com/squeeze. You can download that for free, and you can look at everything, how it has to do with Reddit, Wall Street Bets, GameStop, the whole scenario.
Okay.
Bottom line, you're not gonna like my answer to the silver squeeze. But you will like my answer to where silver's going. So I think it's quite impossible to do what the Hunt brothers did. Okay. If you remember in the 70s, two oil billionaires from Texas, they bought a third of the global physical supply of silver.
If I remember, what are you saying? I'm old? No, actually, I was a kid. I do remember that. That got me into stacking silver with my dad, actually, the whole Hunt Brothers thing. So anyways, go on. I'm sorry.
Yeah. And so that will not happen. You will not have a consortium cornering silver again. You got too much government intervention back then. What they did to the Hunt brothers is they made them liquidate. It was called Bloody Thursday, and they had to just start liquid.
Yep.
They didn't like it, to say the least. So I think that's not going to happen. I think the paper contracts, which is what all the silver stackers are always saying, there's manipulation, there's suppression. We know what JP Morgan and Barclays and all these banks did. They spoof trade, so they create like a large sell order. Then you think, oh my God, I'm not going to buy because there's a big seller out. But and they got slapped with huge fines for that, etc. Paper leveraging on the COMEX doesn't happen in silver. It happens in every commodity. Every major commodity, there's 29 of them. They all trade at a leverage to these paper contracts because of future contracts and companies that need to secure, or governments that need to secure, commodities down the road. Think of China. They're building cities for 50 million people. They need copper, they need silver. They need to secure all this, in advance. So they have their own market makers doing this. This is not what's going to break the COMEX. I think, and the COMEX has so many regulations now that it can trigger, it can tell you can't do this, you can't do that, et cetera, et cetera.
Yeah, they could, if you ask for delivery, they could just give you cash.
Yeah, they can. Yeah. So I think, and you saw major silver squeeze in January. You saw literally, you would have called a bullion dealer. They were out, and that's,
we lived it. Yes, absolutely.
Yeah. I think the retail community has to understand that the retail investment in silver is about 20% of silver supply.
Right.
Okay? That's what it does. It's 20%. Where's the big volume here? The 50% is in industrial uses. And industrial uses for silver, because it's so cheap, are just getting bigger and bigger.
So what if Elon Musk says, I want to take delivery for all my EVs? You know, I mean, what happens, right?
Exactly.
Is that the squeeze?
That is the squeeze. When corporations and governments start saying there is a problem here, there is a problem, we need to look at the strategic supplies of silver globally. We need to redistribute. If there's talk about the problematic part of the industrial side of silver, that creates a situation where now retail is really jumping in there, because what you saw is the physical retail jumping in there, and what we need in order to see silver going to 40, 45, 50 is you need these paper speculators to jump in there and pay any price. That's what happened in 2011.
Institutional investing.
Yes, the speculators, the COMEX people, not the people that buy the physical, because the physical and the paper can trade at big differences from each other.
They're two different markets. Yeah. There's two different things here.
Two different markets.
Right.
So, and that's why I also think if you're a stacker of silver, you should have a dual strategy. You should say to yourself, I should buy the physical when it's cheap, and I should trade the paper when I think there's a big rush coming. And then take those profits, those capital gains, buy more silver.
All right, so where are we at with that strategy that you just mentioned?
Okay, so at $25 an ounce, silver right now is a bargain. If you look comparatively to many other things that you need to look at.
Bargain in the paper markets or bargain in the physical market? Because you don't get an ounce of silver in retail for $25. You're paying a high premium. So are you saying it's a bargain now to be trading in paper contracts? Or are you saying it's a bargain to buy even if you're paying, $8 over spot?
Well, if you're paying $33 an ounce, it's not a bargain, in my opinion.
Right.
So that's one thing. But on the paper markets, for 25, if you can secure 25 an ounce, I think that there's a myriad of reasons that tell me that in my analysis, my personal analysis, you should do your own analysis and conduct your own research, etc. But in my opinion, silver is in a bull market and it's going to go higher. It hit a bottom in March of 2020 at $11.99 an ounce on the physical, and it started climbing up. It reached about 30, if you remember, in August 5th, 2020.
Oh, I remember.
Absolutely. So I think it has much more to go. We have never seen a bull market for silver that ends in a 100% move, and this is what we're seeing right now. So it's not over. In my opinion, you're getting a lot of people to understand it now. And that's what we need. That's what Wall Street Bets helped us with, right? It showed more people what is silver, why is it important, why is it an interesting commodity, etc.
Yeah, I agree. I think the exposure, like on Wall Street Silver, is just amazing to see, especially with millennials.
For the millennials.
Oh,
exactly.
My goodness. It's so encouraging. So that's one factor. What else do you think is going to push silver higher?
The major reason is a dollar bear market. In March 2020, the dollar finished a 9-year bull market. If you look at the DXY, which is the dollar index, compared to other major fiat currencies, it hit a high. And now it's going down. And I think dollar bull and bear markets are about 8 years long. And you saw that from 2012 to 2012 until 2021, you had a 10-year bull market in dollars. So I think if you look for what other countries and doing with their own currency after what happened in 2020 with the pandemic, many countries are trying to strengthen their own currency. They're trying to step away from the dollar, trying to look at their own economies, and they're trying to strengthen them. There's a process that is very detrimental for the dollar. It's already only 59% of global trade, where it was 70% of global trade in 1999. So it's declining in relevance. The Bitcoin is only served to delegitimize it even further. And I think in the next few years, you will see the dollar index go down. Silver and the dollar do correlate. Silver has done very well under the fiat monetary system in a low interest rate environment. So since the year 2000 and until today, it's up about 550%. And so, and it was up about 900% in general. In terms of like gold and silver, I think 2 years worth of your lifestyle burn rate at today's lifestyle burn rate is a lot. Think about a family that spends like $3,000 a month. 24 months, that's $72,000 in today's world. If there's a real panic, $72,000 might be a lot of money. And so that 2 years in a depression, it could be 6 years worth of purchasing power, or in a hyperinflation runaway, resets type scenario. So I think I am comfortable with that 2 year that we discussed at the beginning of the show, especially because I spent a little bit more than 3,000 as a firm unit. So my position is I think I can manage in that type of environment in terms of my barterability possessions. I also think that it's important to have other means of safe havens. So maybe a second passport, maybe another location, like a second home, maybe a second home in a different state for you, or a different country. I think that connections, other relationships that you can build, where you have a lot of people that you can connect with in that kind of a scenario. I
know food, water,
yeah,
shelter,
sure.
personal protection. I actually have a whole series on prepping the Yankee way, and stacking is to me an important part in that regard, especially the physical. But it may never happen. If it doesn't, this may end up in the hands of my children. That's fine. All right. So thanks again, Lior, for joining me. How can people interested in your insights, which you have incredible insights, how do they connect with you?
Wealthresearchgroup.com is the website. There's on the home, you can sign up for the newsletter. I think the newsletter is like, I think it's the ultimate way to keep tabs with what's going on. When I founded the newsletter, the idea was just that I spend about 8 hours a day either talking with companies, talking with the hedge fund managers, talking with people that are in the investment industry, etc. And then I try to put these notes together for myself. And then I thought maybe I can share those notes. And that's how the newsletter was basically birthed.
Excellent. Well, I hope you enjoyed part 1 of my interview with Lior Gantz. Stay tuned for part 2, and I hope your day is A-OK.